Why I'm investing in silver now, before the price surges. For years, silver has been overshadowed by its more glamorous cousin, gold. Yet historically, silver has acted as both a monetary metal and an industrial workhorse. Right now, a confluence of factors is creating what I see as a unique window of opportunity. I'm increasing my exposure to silver before its price potentially surges. And here's why. 1. Supply-demand imbalance. Building silver demand is rising on two fronts. First, it remains a safe haven asset for investors worried about inflation, currency devaluation, or financial instability. Second, silver is indispensable for industrial uses such as solar panels, electric vehicles, 5G networks, and medical devices. The Silver Institute projects record-high industrial demand in the coming years. Meanwhile, mine supply has struggled to keep up because new projects take years to develop. This mismatch between demand and supply often precedes price increases. 2. Silver is historically undervalued. Relative to gold. One of the simplest ways to judge silver's valuation is by the gold-to-silver ratio. How many ounces of silver it takes to buy 1 ounce of gold. Over the past century, the average ratio has hovered between 40 and 60. In recent years, it has been much higher, sometimes exceeding 80. When the ratio is that elevated, silver has often outperformed gold in the subsequent cycle as investors rebalance into the cheaper metal. 3. Inflation hedge with extra leverage. Both gold and silver serve as hedges against inflation and currency debasement. But silver's lower price per ounce gives it more beta. In other words, it tends to move more dramatically than gold when precious metals rally. For investors seeking exposure to hard assets, silver can be a leveraged way to express that view without entering futures contracts or using margin. 4. Expanding green energy demand. Governments worldwide are subsidizing renewable energy, electric vehicles, and advanced electronics, all of which consume significant amounts of silver. Unlike some materials, silver has no perfect substitute for its combination of conductivity, reflectivity, and antimicrobial properties. This structural demand growth could keep upward pressure on prices for years. 5. Limited downside. Compared with other assets, equities are at historically high valuations, real estate faces rising borrowing costs, and bonds still offer yields below inflation in many places. Against this backdrop, silver offers a tangible store of value that is not tied to any one government or company. While its price can be volatile in the short term, long-term downside appears limited relative to the potential upside if the supply-demand story plays out. How I'm approaching it. I'm diversifying my exposure. Physical silver, coins or bars, gives me direct ownership without counterparty risk. Exchange-traded funds, ETFs, provide liquidity and convenience. Select mining stocks offer leverage to rising prices but also carry operational and political risks. By spreading across these vehicles, I aim to capture silver's potential upside while managing risk. Final thoughts. No one can perfectly time a market, but certain fundamentals make silver unusually attractive today. Rising industrial demand, limited new supply, and an historically high gold-to-silver ratio suggest the metal may be poised for a breakout. For me, building a position now, before the crowd catches on, is a prudent, research-based decision rather than a speculative gamble.